Hello, everyone, and welcome to part 2 of the HUD 101 webinar. My name is Michelle Pierce, and I will be producing today's webinar. To reduce background noise, we start with all attendees on mute. However, questions and participation are encouraged, so if you have a question for Les, please post that in the Q&A. If you have a question for me, you can put that in the chat. A quick note about CPE credit. We are required to monitor attendance, and we do this by using pop-up attendance polls. There will be 3 random polls per hour, and in order to get full CPE credit, you'll need to answer 2 of the 3 polls. And I will leave those polls up for at least 5 minutes. So I will launch one of those now. So if you see that pop up, you'll just need to respond to it to get credit. And some systems block the pop-up. So when I launch an attendance poll, I will also put a comment in the chat. I'll do that now. So if you didn't see the pop-up, you can reply to that comment in the chat. Just say here, and I'll note your attendance. CPE certificates will be mailed to you within 3 business days. That is all the announcements I have left, so I'll turn it over to you.
Okay, thank you, Michelle. Obviously, we're back for day 2 of HUD 101. As I recall, since it hasn't been that long, we ended up somewhere around the transition into the HUD audit guide. So I'm going to start my screen share and we'll move into chapter 1 of the guide. Hang on, just let me get the windows appropriately sized. And we can go forward. We welcome you all back. It's a great Tuesday, right? Tuesday morning here. It's the last warm day. Well, I think we maybe have one more warm day. After this, the weather says it's going into the 50s. So I know my son is in the Midwest in Ohio, southern Ohio, right near the Indiana border. He said it's gradually changing there too. So I guess fall is in the air. We're just now what? 16 days away from Halloween. I can't wait to get that over with. Get rid of those stupid shows on TV. Anyway, we're happy to have you back here today. Now, a couple of other things, just in continuing on from our last meeting. Remember, this is HUD 101, and we mean that as an introduction, if you will, to the basics of HUD auditing. So far, we have covered the general compliance, if you will, requirements, starting with the AICPA, the Yellow Book, what the reports look like, how these financial statements kind of come together, and the rules around most of that. And now we'll move into chapter 1 of the HUD Audit Guide. Now, the HUD Audit Guide is the prime directive for auditing HUD projects. If we are to talk about nonprofit projects, we would indicate that, well, they can be covered by single audit. That's generally the rule for a nonprofit to be covered by the Single Audit Act and therefore uniform guidance. However, given the fact that the compliance supplements that are available are fairly restricted down to 3, and those 3 are related to the Section 202 program, 202 Capital Advance, a Section 811 Capital Advance, and the Section 8 subsidy program. There's a cluster. It's I think the only cluster HUD has. It's called the Section 8 cluster. Most of those, we look at the numbers of being 14,195. Absent those 3 specific programs, there are no other compliance supplements, and therefore, under the guidance given under parts 3, 6, and 7, you are led ultimately back to the HUD Audit Guide, and the guide will talk about that. Now, the HUD Audit Guide is the probably the most utilized, I hate to say the word famous. Famous isn't really, I don't know the word I would use there, but it's the most referred to of the types of documents like this. RD has something similar. In the last year, they adopted a very similar audit process to what HUD does, which includes a report on the financial statements, including a paragraph giving an AUC 725 opinion on the supplementary data. They both have copious amounts of supplementary data. They both require a opinion to be given on compliance with the major program, and they both require a yellow book report, which gives well, I was just going to say gives is not the right way to say that, but we issue a report on internal control and compliance at the financial statement level with laws, regulations, contracts, and agreements. Having said all that, at the end of the day, the HUD Audit Guide is the prime document referred to. Even among RD circles, there's a bit of confusion over what they're issuing in Chapter 4 versus their own audit guide. So we'll talk about that. So there's already a question. Let me, Brendan, I'll answer this here, but I'm going to get more into it in a minute, so I'm not going to close it out. The question is, I figured I would get a question in early. Not sure if we will touch on this or not. Is internal control testing around cash required for just HUD, or is it required for all multifamily testing? Now, Brendan, that's a little bit of a loaded question. Because you asked this question right up front, as I probably was describing the Yellow Book report having a requirement to report on internal control and compliance at the financial statement level. Let's go back and briefly summarize what we are required to do based on the financial statements themselves. So I'm going to actually open back up the HUD financial statements, the sample financial statements I used in the last meeting. Oh, wouldn't you know, they're going to open up on the other screen. Okay, now, if we look at the reports, let me just get to this one here. We give our an opinion. This is pretty standard stuff. Then we refer back to government auditing standards, and let's go down to the government auditing standards reports. Well, the report, I should say. Now, here we give an internal control report over financial reporting. We are to talk about the internal control over financial reporting. This is different than internal control over compliance. Every Yellow Book audit requires that we issue a report on internal control and compliance. However, this internal control that we're mentioning is internal control over the financial statements. And in that case, the only requirements that we are, well, it's kind of stupid. I'm getting hung up on the word that required. The only requirements that we are required to follow, right? The only requirements that apply to us are those related to basic auditing standards. So you must understand internal control. You must do a walkthrough. You must assess internal control. You do not have to test internal control. And what the Yellow Book does then is says, take that normal AUC 315, AUC 340 standards, those two requirements, the requirements in those two standards, and then issue a report on the results of that review. So the Yellow Book doesn't really expand the scope of testing or anything like that on internal control. What it really does is say, take what you learned in the planning process outlined in basic auditing standards and give us a report that reports at the very least significant deficiencies and material weaknesses in internal control. Now that could be around cash. It could be around revenue. It could be around any other account, system, or assertion you want to touch on. Then that results in a finding or series of findings if there are weaknesses that are shown as a result of our assessments of internal control. Then we also review compliance with laws, regulations, contracts, and agreements where non-compliance could have or did have a material or significant impact on the financial statements. Then we move on down into the compliance program. Now here is a little more direct answer, Brandon. If you have a major program in any of the audit methodologies that are required, be they HUD audit guide, be it RD or UG, uniform guidance, each one of those compliance audit requirements requires the auditor to test internal control over compliance. So the difference between a Yellow Book audit and a HUD, RD, or UG audit is that we ratchet up the internal control and mandate a testing requirement on internal control over compliance. So to the extent that cash is related to compliance, and in HUD it is, in RD it is, then internal control over cash is a compliance requirement and must be tested. It is required to be tested and reported on. However, if you are in a Yellow Book audit, you are still required to assess internal control over cash, but not required to test internal control because we don't have a mandatory test or testing requirement. So in splitting these up, when you get down to here, both of these require us to do internal control. We never give an opinion on internal control. We only give an opinion on compliance, and we report weaknesses in internal control in both HUD and the Yellow Book. The difference between HUD and the Yellow Book is that the focus goes from the financial statements to the major program, and testing in HUD, RD, or UG becomes a requirement, the testing of internal control over compliance. Okay, so I hope that's a little, we're going to get into more stuff specific, to cash. Your question is oriented towards cash, and we'll get into more cash as we get into the HUD audit guide. But in answer to your question, this is the prime difference between there are two prime differences between what we would do in a HUD, RD, or UG audit and what we would do in just a plain Yellow Book audit, because the Yellow Book would only require us to review internal control and report on weaknesses, whereas HUD, RD, or UG require us to test internal control over compliance and, of course, report on what we find. So both of those requirements are in play. They're just slightly different. Now, I'm going to let that sit aside till we get to cash, and I hope that's a little bit of an answer. Now, when you look at this, I'm just going to try to go through here fairly quickly through chapters 1 and 2. We have, we have to get through chapter 3 today also. But this guide is to be used for audits of for-profit and non-profit sponsors. Now, what that means is, to the extent that there is no compliance supplement in uniform guidance for the program, you will refer back to the HUD audit guide. And we remember that the audit guide says, just like everything else does, that all these audits start with an audit of the financial statements. Now, one of the things I like to keep in people's minds is that the financial statements and the idea of compliance seem to be separated. And in many programs, non-multifamily programs, they are separate. So you could go to audit a university or a city or county government, and you could have all kinds of compliance issues that really aren't tied to the financial statements. However, when you look at a sample financial statement for HUD, there is nothing in these basic financial statements that is not subject to compliance. Remember what the regulatory agreement said about these particular things, and I probably will revisit the regulatory agreement when we start back on Chapter 3, and that is just that all assets of the project are subject to compliance. There isn't one receivable, there isn't one asset in fixed assets or inventory or anything that is not subject to compliance, with one exception, and that would be entity cash. So there are probably three or four entity accounts on the asset side of the balance sheet. So and they're all kind of focusing back to the same thing. There are certain assets that can exist at the project level that do not pertain to the security instrument that HUD has issued. There are very few. So virtually everything else you see in this financial statement is tied to some level of compliance. So all the cash, the receivables, did you collect all the receivables? We are supposed to make sure the receivables are collected, and if they're not, where did the money go? Did someone take the money? So instead of the money comes in from the tenant, did it make it to the project, or did a site manager abscond with the money? HUD wants to know. So the liability side, you can only put liabilities on the books that HUD has approved, essentially. Now, regular operating payables, accrued expenses, which are mostly payroll-related liabilities, those are fine at the project level. But if you go out and get new liabilities, that's subject to certain criteria or rules. For instance, in this year, if you were to go get a PPP loan at the project level, some did, some didn't. Some got it at the management company. And I would think the majority got it at the management company, but some did get it at the project level. If you had a HUD mortgage, a HUD first mortgage on your books, and you went and got a PPP loan, without getting HUD approval, HUD is coming back now and saying you were in a state of non-compliance, because the security instrument says you cannot go get another loan or commit project funds without HUD approval. And we have multiple projects being reported to us that received PPP money, and HUD is telling them they went and got a loan against HUD's rules. So my point is just simply this. There is nothing in a set of HUD financial statements that is not concerning compliance somehow. All compliance except for, well, let me say this, with the exception of tenant files, almost all non-compliance is dictated or shown or detected in the financial statements. So there's very, very little possibility of separating out a financial audit from a compliance audit in a multifamily engagement, because the regulatory agreement, the nature of the agreements, wraps everything into it. The security instrument grabs everything. Okay, now having said that, we get to the HUD audit guide, and we're going to tell you that, look, we have to do this. It's a requirement, and that reports are really the whole way HUD manages the program. So think about it this way. from the beginning, and I mean the beginning, way back in the 70s or 60s, HUD used to have these financial statements issued, and they were in regulatory format. And they would go to the field office, and they had 2 or 3 handbooks to explain how to do all the review of all of this material. Then in 1998, we put it all on REAC and said everybody's going to get the same review, and we'll do it with a machine, and it was well designed. There's nothing inherently wrong, per se, with what HUD was trying to do. Maybe we don't like the coding or how the system worked or a couple things like that, but the point is it was really designed to come up with a review of compliance based on the financial statements. Now, the HUD Audit Guide had been in existence, but the HUD Audit Guide then says, look, the guide is mandatory for all for-profit entities. However, it is not, and you can read this yourselves, I'm sorry to read that, but it's not intended to cover all situations that may exist or replace auditor judgment of the work required to meet both GAS and or GAGAS requirements. Suggested procedures contained herein might not cover all circumstances, so the auditor should use judgment to tailor the procedures so that the audit objectives may be achieved. And let me add this, in the most efficient, cost-effective manner possible. Now, from that, you get the idea that the audit guide is a mandatory document, but the procedures listed therein are suggestions, not commandments. The gentleman that released the last version of the audit guide was named George Datto. Now, George was an older gentleman at OIG. Had a reputation for being a little crusty from time to time, but a great guy, a good friend. He retired. So when he released this 2008 version of the audit guide, it wasn't like Moses. You know, you come down from the mountain, his face is glowing. These are commandments written by the finger of some sacrilegious HUD deity. No, they were just suggested audit procedures with a goal in mind to achieve a couple of things. And if there were better ways to achieve them, so be it. Justify that and move on. So although the guide is a requirement, it is not the end-all, be-all, final say. So if a thing says do this, it is not 100% requirement in every case. There may be alternatives to do this. However, the next slide then told us a couple of things. Despite these being suggested procedures, if you determine that other procedures or procedures in the guide would not be performed, tell us the reason for excluding those and what you're going to do as an alternative. None of these things were meant to be 100% hard and fast rules. And the guide has continued to evolve. Chapter 1, I'm reading from Chapter 1 right now. The guide is developed into 7 chapters. Chapters 1 and 2 are general in nature. 1 is very general. 2 talks about the nature of the reports, how the packages are put together. Chapter 3 is multifamily. Okay, Chapter 4 would be hospitals, which you don't see that many of. Chapter 5 would be cost certifications. Chapter 6 is Ginnie Mae, which is a mortgage insurance program that takes HUD-insured mortgages generated under Chapter 7 of the guide, sorry, gets convoluted, and repackages them as investment vehicles. And of course, 7 is single-family lending, so mortgage brokers or bankers. Okay, so if you didn't do something, you would have to qualify your opinion, but you have to address the compliance requirements. That means cash receipts cannot be ignored. You can change the procedures for cash receipts, but you can't ignore cash receipts unless it is not direct and material to your program. Now, we should make sure the procedures are complete and applicable. If additional requirements are identified, now this goes hand in hand with Chapter 3. This audit guide was issued in 2008. Somewhere around 2010, we started implementing EIV. EIV is the Enterprise Income Verification System. We'll talk about it briefly today. It helps with the tenant file testing process. Having said that, if EIV becomes a new requirement, the audit guide tells us we should adjust our requirements for that. So when things change, the guide doesn't change as quickly as other program things may change. So we have to change with it. Okay, and that's just where we go to. We should follow all the rules, regulations, and other guidance that should be followed. Procedures should be modified to test what is currently required. And then they give us examples of mortgagee letters or housing notices. And we'll talk a little bit about that here in a minute. Okay, then if you are single audit, you still have to file with the data collection form at the harvester. Although that's not really a topic for today. HUD gets what they want, by the way. They do not ever go to the single audit clearinghouse to look at what is there. They collect their own data collection form data inside the React template. However, that does not alleviate you of the requirement to continue to file the other single audit requirements. Now, management letters. Management letters themselves. That's an interesting comment. Management letters are an anachronistic thing in the audit guidance now. I mean, there is no real such guidance on issuing management letters. There are letters to governance. There are requirements within this document, specifically in Chapter 3, that require us to report small or non-compliance in some format in writing, and that format is generally referred to as the management letter. Whatever that is today is hard to tell, but most of us would think it goes in our letter to governance. So we would report that in there if there is an electronic filing requirement. Now the rest of this is pretty easy. Meet the yellow book requirements and quality control standards. You can provide to the peer review reports. That's actually gone away now in another change. The answer to that is they can be provided if requested. There is no need to send it in. You have to meet the licensing requirements in each state, but it doesn't do anything else. There are no specific requirements for licensing outside of what these states require. HUD tried to do that a few years ago, called the audit roster. They were trying to get a listing of auditors that were allowed to do HUD audits. That idea was probably it was shut down pretty quickly. There were a couple of issues with it. Okay, then they just give us another couple of comments here that are pretty general. And audit's comprehensive in scope, requires the auditor to get an understanding of the entity and assess the risk. Report under the yellow book on internal control and compliance of a reporting, and then the guide expands on that reporting to include compliance and internal controls. We are required to test and report on compliance regardless of the amount of federal assistance. Now, what that means is this. If you do not have a major program, you are under the $500,000 limit. You can then turn around and not issue a major program report. However, you still must test some compliance under the yellow book. It wouldn't be the kind of testing that would be justified or that would justify an opinion on compliance. It can be less work, but you have to still look at some compliance. And I would argue that that is where compliance is, non-compliance would be material to the financial statements. Now, program limits, as you know, they haven't changed. 500,000 for HUD, 750 is the uniform guidance. Lender is 2 million, that's fine. And they tell us a few things about other programs. If you are less than the amount above, you treat it as a non-major. However, you still must test and report on compliance without the opinion and the scope is reduced. Now that's just telling us we're going to go to the yellow book. So if you do not have a major program report, you're going to issue only a yellow book report. Previous to this, in 2012, we issued a non-major program report. So we would issue a major program report and a non-major program report. That has been done away with because it really is the same report we issue with the yellow book. Now, a couple of other things here just to get through. HUD requires reporting of all compliance violations in writing. However, well, and I'm just going to, you have to almost just read these because there is a little bit of a problem here. We require the reporting of all compliance violations and identification of the total question cost for each finding has a result of non-compliance. But HUD requires that all instances of non-compliance with any HUD requirement or regulation, material weakness, and internal control, all instances of fraud or illegal acts and contract violations be reported as findings in the audit report. That is not really true. That statement in Chapter 1, and you can go to Chapter 1, and the statement is reading like that. So I said, however, non-compliance and deficiencies that were corrected during the audit year before the report was issued are still findings. They're just shown as resolved findings. And then we really want to tell you that finding requirements are listed in Chapter 2 in general, but that each chapter, including Chapter 3, has specific reporting requirements, which we'll get to in a minute. Okay. Sampling and other things of that nature. HUD doesn't get caught up in how you sample. We're going to issue an Appendix A to the HUD, to Chapter 1 of the HUD Audit Guide on sampling. The sample sizes are representative generally, and you have to follow that Appendix A whenever you see the word sample, although there are places where it says sample that you may not be sampling. Okay? You should consider the objective, and all material instances of non-compliance, including those identified through sampling, must be identified as findings. And of course, you get a minimum table sample size. So for populations over 250, the lowest you can get in a sample is a 25. Now, risk assessment determines this. So you would want to have a risk assessment that would have a lower, be lower on the spectrum to get to a sample of 25. But if you have a population of disbursements over 250 large, you cannot get smaller than 25. This is the ultimate downside of HUD auditing. And now RD has done the same. And in fact, when you look at the ANA Guide to Government Auditing Standards and Single Audit, I think even any population over 250, these tables are close to the same. This is the downside to almost all these audits because they do have minimum sample size requirements. You can only go up. So when I get to, if I want to 25, I want to get to 25, I got to be a low risk audit. I got to go out and prove by the risk assessment procedures I undertake that risk is low. If you get to a population of less than 250, it will be a 10%, and that's the minimum. And that's pretty much what we see. So remember, risk assessment has to be set at low. lower. I won't go into the various grades of, moderate, low, high. This is going to be more of a judgment call, but risk has got to be low to get there. Then it tells you to follow AUC 315 and I would argue 935 and do your risk assessment and specifically internal control. Now, on the financial statement audit, that's what they tell you. We add the internal control reporting requirement under the yellow book. On a compliance audit, you're told here, demonstrate an understanding and assessment of internal control. Brandon, the sample numbers do not apply to tenant file testing, right? Wrong. They apply to all testing whenever you see the word sample. So tenant file testing, if a project has over 250 tenant or units, call it units, that project is not going to get a sample less than 25. So anytime you see the sampling, and John, we're going to talk about group testing when we get to chapter 3. Now because this is just chapter 1, I'm going to talk about group project-based sampling in a minute. But Brandon, the sample numbers do apply to tenant file testing. However, John is bringing up an interesting point. There are ways. There's only one way to get rid of sample sizes, and that's to use group project-based testing. It's just not allowable in chapters 1 or 2. It's only brought up in chapter 3. So hang on for a bit, and we'll get back to that. Okay, but tenant files are covered by the sampling guidance in Appendix A. Now, so I'll show that one is answered. I'm leaving the others open. Internal control over compliance. You must assess and test internal control over compliance. So demonstrate your understanding. Single audit. Under single audit, the difference between HUD and single audit is you must try to get single audit to a low assessed level of compliance risk during planning. HUD doesn't require that. HUD only requires that you perform tests of internal controls over compliance regardless of our assessment. Single audit says you must try to assess risk too low. That's not a difference. I mean, that hasn't changed. In UG, it stayed the same. So HUD, RD, both require testing of internal control over compliance. So just keep that in your brain. It's a requirement to test internal control over compliance. This causes a little bit of a problem when you start to assess internal control over the financial statements, and we say cash, and we set that at high. I don't know how we really plan on doing that when internal control over compliance had to be tested, and cash would certainly be part of the compliance. So, results clearly stated in documentation. Now, the single audit one, I just add here, that should probably, to make this clear, I might put that in italics, just to make it clear that that is not a HUD requirement. I'm just saying in there, single audit, the difference between single audit and HUD, or UG and HUD, is that single audit must plan to low, where HUD only says you must test internal control over compliance. Okay, chapter 2. You know what the reports look like. You issued the 3 reports, IPA report on the statements, which is a normal, everyday, plain vanilla thing. Luckily, none of those are changing this year. Next year, maybe, I think we'll probably get off at least another year beyond that. The Yellow Book requirements the change this year does not require a new Yellow Book report. And then, of course, we have the IPA report on compliance for each major program and internal control over compliance. Then we further stipulate that you need a schedule of findings and question costs. If you have a management letter, they list that, and let me just, I don't know why I don't think about this at the time. I would just say, if issued, you have a required status of schedule of prior audit findings. Now, both the schedule of findings, and the schedule of status of prior audit findings are always required. Always. Even if they say none, they are always required to be in the report. People just put them in and they say none. Or they have the findings if they have them. If you have findings that need corrective action on them, they are accompanied by a corrective action plan. Now, everywhere else in our compliance environment, the corrective action plan is required to go on client letterhead. Multifamily housing for HUD is the only one that doesn't require that. However, I still think it's a best practice to get the corrective action plan on client letterhead. That doesn't really matter because it will get uploaded into the React template without it. I understand that. However, UG now requires the compliance or the corrective action plan to be on client letterhead. I don't think RD really notices for a lot of reasons. Lender, Chapter 6 and 7 certainly requires it on client letterhead. So now I had on there, this probably means a report reference must be made on the prior audit findings and CAP schedules. Why do I say that? Because those are defined as client prepared documents. Now, some people do issue a AUC 720 opinion on that, on there where they disclaim any opinion on it at all. They don't include it as supplemental data. My personal opinion is that probably is the way to do it, but I'm going to put on here that this is that's just Les's opinion. Other people do believe that, but it's not a requirement. These little tweaks, I'm sorry to make them. You might just write that down on what you have there, but I don't want to infer that HUD requires it. HUD stays silent on it, but other people are interpreting it that way. Other people are not. Okay, we've looked at the example reports, and all of that's now done. We report significant deficiencies and weaknesses there. The compliance report you've seen already. We didn't look at it a ton, but the one thing I would say about the opinion on compliance, when you look at these reports, you are required under Chapter 2 to have a kind of this thing in here about where you can do this in the table the way we've done it here, or you can just put it in a paragraph. That all depends on what you have going on. And then you are to only list the requirements that apply to you. Now, we've listed everything here except for one missing thing, which you'll notice. You will not see a fair housing listing in there. That's because it is impossible to give an opinion on fair housing. And that comes from prior audit guides. We used to have a requirement to issue a report on fair housing. It was what we would call a negative assurance report. You know, hey, nothing came to our attention during our procedures that would cause us to think there was a fair housing violation. That was kind of a waste of time, and OIG got rid of it without changing Chapter 3 of the guide. So we still address it, but we can't opine on it. So essentially, you're giving an opinion on the mortgage, the replacement reserves, the distributions. They want you to list each of those specific requirements of the HUD audit guide. And that is kind of a unique thing involved in this. Okay, now the schedule of findings. If we are to look at a couple of items here, and I don't, I guess maybe I should find a section here that actually has, sorry, I'm just trying to get the right one. Open Sesame, where did you go? I want to just come down, schedule of findings. So, and this, I don't think this is, this is just chapter 2 of the HUD audit guide. It's prepared by the auditors to be included in the audit report package. When findings are present, it is arranged in 2 parts. Corrective actions, findings for which corrective actions are not started or in process, and the second piece is findings for which corrective actions have already been completed. Why break them into 2 pieces? Because if you have findings that have corrective actions already completed, the auditor will be, you will be giving in essentially your opinion that the finding or the resultant corrective action plan was effective in fixing the problem. And there will be no corrective action plan required. However, if it has not been started or is only in process, then the corrective action plan needs to be in place. Okay. Now, we'll come back to reporting on the group project method, but the content of a finding is listed here. Numbering the findings, what the question cost is, the universe, information on the universe of the population, the actual sample size information, how many of the items were in non-compliance. Now these 3 here are to allow us to project the sample to our opinion. So when you have an item of non-compliance show up, and I would use tenant files as probably one of the easiest things to do, you have to then say, okay, look, I had 3 tenant files where they didn't have signatures. That would be what we call a known question cost. You observed 3 things being wrong. Your eyes have seen them. Okay? You have to then, that becomes the basis for a finding. So you have to make a decision. Is this a finding, yes or no? Now that's a lot of judgment involved in that decision. Then you would have to take that 3, let's say the sample was 120 units, so the sample size was 12, and you would say, well, gosh, 3 out of the 12 had this wrong. That's 25%. Therefore, 25% of my 120 are likely to have a problem. Then you use that determiner, and that's the likely question cost, even though there is no question cost, it's the likely amount of non-compliance. You would use that to determine your opinion. And so that's why they ask us to include the information on the sample size to give us perspective, to give the reviewer perspective on what was done. How many was sampled? How many come up with the issue? How does that relate to a projection back to the population as a whole? Of course, then you have the yellow book items, condition, criteria, cause, recommendations, other things. Now, we would get to the management letter, and we'll get to that more in chapter 3. But if there is some non-material non-compliance, it has to be communicated in writing. and issued in some sort of communique that previously was known as a management letter. Don't know what that is now. It's usually more of a governance letter. We'd put it in there. And we can address that more in Chapter 3. But then there's the schedule of the status of prior audit findings. This one is a package prepared by the client. So note the difference here. Prepared by the client. Prepared by the auditor. So these are kind of different things. Whoops, I can't get too fast ahead of this. Now, this schedule is unique in that it does two things. If you have a finding that is open from the prior year, it gets recast in this schedule. So part 1, the schedule addresses all findings that were in the prior year report, including whether they were question costs were paid or otherwise resolved. A current description of the prior audit finding along with the current status should be included for a finding. If it's no longer relevant, you should note the reason. Now, if that finding was solved last year, in theory it does not have to be. If it was issued, has already resolved. Corrective action completed. In theory, it doesn't have to be included in the prior audit finding schedule because it was already resolved in the last year's finding. Okay. Then the second piece of this is unique. The auditor is to inquire about any audits, attestations, studies or reviews conducted by HUD, HUD management, a contract administrator, any other federal agency, state agency, and any findings from such a review should be included by the auditee in the schedule, even if corrective action has already occurred. And you would go down to the schedule. By the way, the auditor doesn't have to, it should only look at the reasonableness, okay, of this to assess the reasonableness of the schedule and report on has a current year finding. When the auditor concludes the schedule material misrepresents the status of any prior year audit finding. You are not required to go do anything on the items here. The auditor, the auditor does not have to independently confirm the completeness of these reports. Now, this is a risk assessment step, okay, and it's carried out at planning. The AICPA requires it in AUC 935, and the HUD Audit Guide requires us to ask. This is the documentation of that. Are we required to report the schedule of findings and question costs for the audit year and the prior audit year, or is this report only required for the audit year? If you, in general, let me say this, Angela, the schedule of findings and question costs is generally a one-year schedule. Even if you issue comparative statements, the schedule is for the current year. And if you have prior year items, they got followed up on in the prior audit findings schedule. Now, when you look at so when you talk about the schedule of findings and question costs, that may actually, because of the way you refer to that, that may involve looking at what you have in uniform guidance. Okay, even there, I think the answer is the same. It's a one-year schedule. Anything else from a prior audit is listed in the prior audit findings. Because if it was a finding that was outstanding in last year, you get to this year, if it's still outstanding, it gets left in the schedule of prior audit findings and indicates that it is still outstanding. So the schedule is a one-year schedule. Okay, that's a great question. Now I want to just get down to show you the schedule of prior audit findings. This one might not have, I might have listed the wrong one. Okay, so here's the schedule of status of prior audit findings. First, section 1, auditee reports on our prior audit findings, things we issued last year. Oh, come on, just highlight that. Okay? And then you would list it here, finding status, finding status. Then number 2, other findings from HUD and other auditees to list any deficiencies in letters reports issued by HUD management here. Remember, these 2 parts of the schedule are the items from outside. So just as I close this thing up, Angela, I want to make sure findings are only for the current year schedule. If they're still outstanding, they go to the prior audit finding schedule where they're just continue to be reassessed for the next whatever, as long as they're outstanding. So if it's still a problem, you put it in the prior audit finding schedule and you say, this is still a problem. It doesn't even have to be repeated again in the current year. You just say, this is still an issue, okay? And you're looking for a corrective action plan. And then these 2 things are, the schedule takes on a new tone when we're listing things from HUD or other federal agencies or state agencies listing talking about non-compliance. Okay. So we've gone through those findings on the other schedule, prior audit findings, we've discussed that. Corrective action plan, we've done this. Now, fraud and equity skimming, the last thing coming out of here before we go to chapter 3. If you have fraud or equity skimming, and we define that, we'll talk a little bit more about that definition in chapter 3. It's the willful misuse of any rent, assets, proceeds, income of the funds. And our first responsibility is to governance. If they will not communicate to the HUD or to third parties, the auditor would then report directly to those third parties. This is completely in line with the yellow book also. If there is fraud, there is a line or a phone number to call to the single audit coordinator. That is where the stuff for significant fraud would be reported. Okay, now before we move on to this, just a couple of issues before we go to chapter 3. Remember, our regulatory agreement controls all cash, except entity cash. That's the only thing it doesn't cover if you decide to segregate that. But security deposit cash, reserve cash, escrow cash, operating cash, all are covered. So all the cash must make it to the project, like cash receipts. All the disbursements must be for reasonable necessary expenses of the project or allowed distributions. That's straight out of the regulatory agreement. And then I remind you that separation between project cash and owner cash, that segregation is really what we would call entity cash, right? That's entity cash. And the chart of accounts has a line for that. And we'll talk a little bit more about that as we move forward. Oh my gosh, we've almost been an hour. Okay. The next thing is related party transactions. Equity skimming risks are increased when we have more related party transactions. So having just said that is what you need to know. However, HUD is more and more reducing the risk of equity skimming by making sure owners have access to 100% of their distributions. Okay? There's their full surplus cash. We'll see more about that in a minute when we go to the guide. However, when we look at our reviews, if you go back to slide 86 in this material. Look at how many ways we have equity skimming. Loans from project funds, distribution of assets, disposing of assets, commingling of funds. HUD is really looking at how many ways you can find equity skimming in this project. So when we go through the review, okay, what they are looking at in these assessments, 90% of it is to detect equity skimming. That's what they're looking for. So your financial statements are the prime indicators of whether that is occurring or not. So that is a big process for us to deal with. Now, here, this is in the last couple slides. I just remind everybody, most people think about this audit that the client is paying the mortgage, and that's the reason for this. HUD already knows the client is paying the mortgage. We could go right out to HUD today and look at, they make every lender report. So remember, HUD doesn't loan money. All they are is a guarantor. We're running an insurance business here. So owners have no personal responsibility for the debt on the mortgage. The regulatory agreement said they assume no personal liability. And this is a very big factor for this. When you look at our regulatory agreement and you come clear to the end, we have a section on non-recourse. This was in your materials. And we get this last discussion here, is section 50 addendum. The loan is non-recourse. Each person who signs below, okay, does not assume personal liability for any repayment due under the note and security instrument, or for the repayment or payments of the reserve for replacement, or for matters not under its control, provided that, okay, they shall be personally liable under this agreement only with respect to the matters hereinafter stated, namely, for funds or property of the project coming into the owner's hands, which by the provision thereof they are not entitled to retain, or for authorizing the conveyance, assignment, transfer, pledge, encumbrance, or other disposition of any mortgage property or interest therein in violation of Section 35A of the regulatory agreement to which this addendum is attached. So they only take personal responsibility for things once they steal money out of the project, essentially, or try to transfer ownership to someone else. So this is very much a non-recourse loan, but HUD tracks payments from the lenders every month. So the true testing here is not about the mortgage, it's about equity skimming. They know already. They know every month who paid or did not pay their mortgage. Now they require us to track the escrows, the reserves. All that becomes key audit areas just simply because the goal is to ensure that the building represents adequate collateral for the loan. So in other words, the owner isn't a slumlord, takes all the money out, doesn't maintain the building, lets it all go to crap, and then walks away from it and says HUD has a building that can't cover the mortgage loan, the value for it. So when the building would go down in value to significantly based on something the owner did, then they can be held accountable. And we'll talk about management agents. Management agents run the project. They're responsible for the day-to-day operations of the project. However, the owner still stays responsible for because they're acting in an agency capacity. The owner is still ultimately responsible. If something goes wrong and they do not, say the management company does not do what they're supposed to do. Maybe they don't file the financial statements on time, okay? They can apply what we would call a civil money penalty. And those penalties have been listed now in the Federal Register. This year, this is as of March of 2020. If you come down to this, multifamily owners, Section 202 or 811 violations. So multifamily, which includes all the insured mortgages, 202 or 811. Look at what penalties start at. $51,222. That's what if you get an assessment for not filing the financial statements on time. So let's say the management agent's in charge of it. The penalty will go to the owner. The owner is always the one held responsible for these problems. So despite there being a management agent, the owner remains responsible. The owner will be the one assessed the penalty. And they are aggressive at trying to apply these amounts so that it was, gosh, the previous was 50,000. So it went up about $900, almost $890 or something like that. But now it's $51,222. I have had this done where people didn't file for 3 years, okay, or some violations of the regulatory agreement. The assessment was $160,000 a couple of years ago. That was $40,000. Now that same assessment would be over $200,000 for four violations of the regulatory agreement. So I just remind everybody, this is how the agent does this is really important, but the owner is still held accountable. In fact, I argue that consequently the audit guide has more procedures and management functions than in any other area of the audit guide. Megha, can they request abatement with reasonable cause? They can negotiate down, okay? But you better have a really good reason. And the last time we negotiated, I had one that literally for $160,000. They were willing to settle for a half, 80. They wanted 20 grand for each compliance violation. Now, we didn't pay that because we have other options available in some cases. But had the owner not had those other options available, I mean, he refied out of HUD. He had the ability to refinance out fairly quickly out of HUD. And so we left and prepaid the mortgage and told HUD to take a hike. But had he not been able to do that, he probably would have had to have paid, you know, at least somewhere between $20,000 to $40,000 for penalties. So it can be abated, but they will never go to zero. You can reduce them, but they will not go to, in 90% of the cases, they will not go to zero. Now, I know there are people on this call who really, I don't know why they're on HUD 101, but they can maybe, they could shed light on that. Also, everyone's had experiences, but my experience is they always collect money, and it depends on your ability to negotiate, the reasonableness of your actions, why what happened. And I'll talk more about it after we get into the Chapter 3. Last but not least, tenant files. Okay, when it goes over $500,000, it's a major program. And that means we're giving an opinion on compliance with those requirements. This is a substantial amount of procedures. So having a major program Section 8 is a substantial amount of work beyond the normal audit. Okay, now at that point, or into this, an hour and 10 minutes. That was a little longer than I wanted to, but those things are terribly important to just understand the basics. Chapter 3 can be looked at relatively simply, okay? But you really can't get out of the idea of what the basics require us to do. Now, having got to that point, let's go to Day 2 materials, which is Chapter 3 of the HUD Audit Guide. Okay. I think just like the other day, we will go 100 minutes. And then we'll take a probably a 20-minute break, and then we'll go another 100 minutes. I know sometimes it might be easier to take 2 breaks and take 10-minute things in between. I don't know. If I had to go shorter or longer, maybe I would do that, but we can get through these 4 hours. Okay, now when we move to Chapter 3 of the HUD Audit Guide. And so Megan, I think that requesting abatement, we'll get into some issue with the findings, but you can get some of these reduced. They will never go to 0 in most cases. You'd have to have a very, very good reason. A lot depends on how well you respond and how close you are to being in full compliance at the time. But I will talk more about the specifics of, say, equity skimming a little later. But for now, I'm going to remove that answer. Okay, now background on Chapter 3. When you get to the background of this, there is one statement, and I'm going to probably bring up a couple of documents. Inside the Day 2 material, you will see a item called the HUD Audit Guide, Chapter 3 HUD Audit Guide doc. It is this document right here. Now, we're going to start at Chapter 1, and I hope these slides are pretty much in line with this. So you may want to split your screen and have the slides on one side, or if you have 2 screens, put the slides on one screen and this PDF on the other screen. Because what we're going to do is walk through Chapter 3 of the HUD Audit Guide, and for each slide, okay, you should find a corresponding description in the HUD Audit Guide. So here's the background that would correlate to the slide we were looking at there on the screen. And what we're trying to do in that document is to highlight the extra material that is associated with each of these things. So we're going to put notes in here. And you'll see these are in italics or they're highlighted in some other way where we put notes in and we talk about a couple of things. We're trying to explain items in the HUD Audit Guide. So this actually breaks into like 107 pages. And the only thing we've split out from that is the tenant file testing, just because there's so much of it. Now, what you get out of this, for now, I'm going to leave this open a touch here. This requirement, the audit guide requires financial audits of these other entities for audits performed under this chapter, which include many types of projects or programs. The required compliance testing must be done for each project on an individual basis, with the exception of when the entity owns or manages multiple assisted projects. When this condition exists, audit guide sections 35J tenant application, security deposits, and management functions can be audited on an individual project basis or sampled using a group project basis. Okay, now what that tells you right away is that as far as HUD is concerned, each project's testing stands on its own. Each project is evaluated and tested on its own, except for projects that are under common management, we will allow you to then test tenant files, security deposits, or management functions on a group project basis. Now, what does that actually mean? And what we need to remind everybody that cash receipts and cash disbursements are not included in the group sampling methodology. That tells everyone who picks up a HUD insured mortgage project that they have a cash receipts and disbursements required testing sample on every project. There is no ability to do that centrally. Now, we can argue all day long about whether that's a good or a bad thing. Okay? To me, it's irrelevant. HUD's already just said what it is. I think it's crazy that we have that issue going on. Why? Because when you look at it, tenant files are always done at the site. There's not one central thing about them. Every project manager does their own tenant files. Every project manager does their own security deposits, essentially. Okay? Management functions, that's a different conversation. But cash disbursements are all done centrally. They might get a few invoices at the project. They get forwarded on to the home office to be paid. But the things that are done centrally have to be done project by project, and the things that are done project by project are allowed to be done centrally. I don't get it, but here's the reason it does make some sense. There is no equity skimming to detect with the tenant file testing. It's very, very rare to have a material dollar amount of thing here. Now, John, does this apply to a UG audit? The answer to that is no. No, no, no. In fact, we can show that, and I did this yesterday. In my update class, paragraph chapter 21, sampling considerations. We're going to go to 2140, what is it, 45? Okay. So, John, auditors can have additional sampling considerations. You can read that. Well, maybe you can't read it. I don't know. It's pretty small on the screen because they have each thing. But if controls over compliance or compliance procedures I'm reading from 2145 now, if they vary significantly, it may be necessary for each location to be considered a separate population. When transactions related to these types of compliance requirements are processed in organizational units using the same controls, or compliance procedures are performed under common oversight, it may be feasible to obtain this. Now, they can do this by A, testing a minimum sample size at each location of significance, or B, varying the selection of less significant units included in the testing from year to year. And then they give you an Appendix E, multi-location sampling considerations to look at. There is no prohibition against group testing in a UG audit. However, there is in a HUD Audit Guide audit. So these paragraphs, 2145, and I think, yeah, that's it. 2144 and 2145 of the ANA Guide to Government Auditing Standards and Single Audit. So this is what applies to a UG audit. There is no group project-based sampling methodology. Well, you can use it, okay? When they look at it, it says here, it may be feasible for the auditor to obtain sufficient appropriate audit evidence about controls and compliance for major programs by selecting one overall sample across organizational units, okay, which is what I would normally do. When it's not feasible to visit all of them, you could then do some minimum sample size at each location, or going to less significant organizational units from year to year. In fact, that is what really HUD is suggesting. So UG does allow group project-based sampling to be done, but it is not a requirement. And it does certainly allow that you can vary or that you can test centrally if the controls are common. There is no prohibition against that. HUD is very unique in doing it. Now, if you look at RD, RD says they do not allow the group project method of sampling. That's all it says. But it does not say projects must be sampled or tested on their own standalone basis. So we're left in kind of a limbo with RD. But for UG, if you had 10 nonprofits under one management company, cash disbursement, test them all centrally. Yes, sir. Absolutely. HUD audit guide, no way. Cannot be done. I cannot find any legitimate way around that people have brought up. It's very, very difficult to do. Okay? So thank you for the question. I think that's an awesome question. Even if we issue separate audit reports, can we still do the group approach in UG? Yeah, I think that's what that is telling me. So if you want to go back and get your own review of this guidance, okay, if controls over compliance at the various organizations vary significantly, it could be necessary to have everybody as a separate location. However, when the transactions related to the types of compliance requirements are processed in organizational units using the same controls or compliance procedures performed under common oversight and monitoring, it may be feasible for the auditor to obtain that evidence by selecting one overall sample across organizational units. Now, you may want to make sure some of every project are included in your sample. I don't know that that's a requirement, but you get multiple opportunities to do that in UG. That is not possible in the HUD audit guide. And I think that's a pretty consistent background approach to how practitioners view it now. Okay? So group project-based testing. What are the requirements around this? So when you look at it, you have to have the similar systems. That's fine. The same supervisor, no weaknesses in internal control. Owner has to agree to group project-based sampling. Why? Because if the owners, maybe there are 6 owners' projects being managed by the management company. Each owner would have to agree to being able to use that methodology on their projects, because what's going to happen is if you have a finding on one of those projects, the finding is theoretically reportable on every one in the sample, whether you detected it on that project or not. So the owner has to agree. Other sections are performed on each project. Weaknesses identified must be reported at every project. I don't know why I said each project. Dollars are only reported where they occur, and you can see the wording in Chapter 3. And it moves on to say, look, if you have non-compliance that occurs, you've got to report it in a management letter. Group samples must include at least 20% or more of the projects. And the smallest number you can use it on is 4. So if I had 10 projects, the smallest number I could do a sample would be 4. If I had 5, I would have to sample 4, and I could exclude 1. But that's a 20% reduction in testing anyway. So it may still be beneficial. So each project has to be included in the sample at least once every 5 years. Other projects can be added based on risk assessment. And nonprofits still follow A1 or single unit UG. So Chapter 3 still is old, referring to A133, but nonprofits still use uniform guidance. Okay? So that is the requirement for group project-based sampling. Where do I think we should use it? Well, certainly if you got 100, and I've had this, 100 projects, I've seen it. So if you have 100 projects under audit and they're all Section 8, you're going to have to use group project-based sampling, okay? And that means you're going to test 20 a year over 5 years. And that's okay, I guess. But where you really can pick up the benefit is in management functions. Every step in management functions can be performed on only 20% of the projects. And you are not likely to have many findings generated out of the management function area. So Tenet Files gets all the press for group project-based testing, and it also generates a lot of findings, but the place to use it is in management functions. You can get rid of, like I said, up to 80% of the project's testing of one of the bigger areas in the HUD audit guide. The only downside is you cannot get rid of cash disbursements testing. Now we'll talk a little bit why I didn't mention cash receipts in that conversation. So John, that's how we look at group project-based testing, okay? And cash receipts and disbursements, this is just my comment. It's not from the HUD audit guide, but you can't get there. Okay. So we talked about applying the exceptions. We know what the reports are like. What additional things do we add in Chapter 3? Well, we add that the mortgagor certification has to be included. Kimberly, we're going to get there. If you'll just hang on to your question about management functions, let's just we're going to work through the audit guide to get down there. Okay? We're going to just go right from A to Z through the guide and talk about each one of the areas in specific. So we'll get to management functions in the next 100 minutes. Okay, so they have a schedule of the mortgagor certification. It's pretty standard. The management agent has a certification. Generally, we don't have problems with these. I do have one owner who's a judge who keeps refusing to sign the owner certification. He's just being a tooligan. That's all I can say. Oh, I don't have to sign this. No, you are the owner. You take responsibility. You should know all about agency in contract law. I don't know what his beef really is. Anyway, now auditors' requirements. This goes back to our discussion of what we're going to include in the report. Now, Chapter 3 is different than the other chapters in and of themselves. So if I came down here, let's see, this is 10. Sorry, I wanted to make sure I was in the right zone. We get a lot of conversation about what the report should look like, why it does what it does. So we're told to issue an auditor's report with the balance sheet, the basic financial statements. Then we issue an auditor's independent report on supplemental data. Now, the supplemental information includes the REACT financial data templates, which essentially support the detail for specific accounts listed in the basic statement data and contain other information as required by HUD. Use of this guideline is mandatory. That means that we are dealing with a structure that looks like this, with all of that supplemental data included, even with a separate balance sheet. Now, I know people asked about this last time. Can you just have this up in your basic balance sheet? People do it. It's not really technically correct, but people do it. So they might have the balance sheet, have the numbers, their basic financial statement balance sheet has the numbers in it, they list it up there. Then they will actually have a separate P&L schedule, and their cash flow will be the same. or what I'm going to try to say, equity and cash flow will be the same basic. They'll put these numbers in the basic financial statements. But that's where that language comes from. Okay? Now, audit findings. Again, we are dealing with the findings in and of themselves about equity skimming, all instances of equity skimming, material noncompliance with any HUD regulation, and any material, whatever, you can read that. Non-material instances of noncompliance are reported to management separately in writing. That's the management letter thing. Yvette, what I would say is, so to clarify, if the basic statements include a chart of account numbers, this is technically incorrect. What I would say is it's not that the fact that the basic numbers have the chart of account data in them, it's that you're not including the full FDS data as supplemental data. So I don't know that the accounts the actual accounts are relevant one way or another. It's just that in the supplemental data, you give an opinion. Let me explain, and people will disagree. I know that, you know, we have this argument all the time, but technically, based on how most people interpret this, if you go up to your supplemental data, our audit was conducted for the purposes of forming an opinion, right? The supplemental data shown on pages X to Y is presented for additional purposes by UFERS and HUD. The above described supplemental information is responsive management was derived from and relates directly to the underlying accounting records. Such information has been subjected. When you get to the definition of what that is, you should be including the financial data. Now, when you get to the AUP, and I don't have that in, I didn't put the AUP in this report, but if I grab an AUP, I probably have one here just to look at from some submission that we're doing here at the moment. Multifamily, hang on. Well, we've processed most of them. I don't see one sitting here already easy. I don't know that this one has it in it. Yeah, I don't have any one of these where I can see the AUP being listed. Oh, here's one. Okay. It doesn't matter what it says. So what you're saying is this: balance sheet revenue and expense data from account numbers 1120 to 7100, including the S1200, the cash flow. They agree, right, to the hard copy financial data templates. And this is really the primary reason for a lot of this. And it all comes down to this, that this first AUP can't be done if you're comparing it back to the basic financial statements. Now, someone else has come up and said, I was told that you cannot put the HUD format up front, especially the cash flow, as it would not be in compliance with the restricted cash flow. Now, that was true previously, Susan. Cash flow has never, the HUD cash flow has never been GAAP. And in fact, that didn't stop anybody from having them be the same. I would have, I would certainly have agreed with you 100% on that it wasn't there. But the primary reason is the HUD audit guide calls for this to be supplemental data, and the AUP actually asks you to compare the REAC data on the left. So when you're looking at the REAC data, draw. So when I'm looking at the REAC data, that's what you would see online, and I'm comparing it to the financial data templates, not to the basic financial statements. Plus the HUD audit guide defines that in several ways. So I agree with Susan, certainly on the cash flow I agree, but that would tell me the balance sheet would still be a problem. The P&L obviously has a lot of differences in it because it has more detail. So I think that the answer is people do try to get away with it. They may get away with it. Their peer review may currently let them do it, but it could be the next peer reviewer will not let them do it. So we generally don't like to see it. If we do 1,500 submissions a year, I would say that 98% or 99% of them come exactly as I showed them in our sample financial statements. Okay? And for that particular reason. And I think it comes back really to the AUP itself. Okay, back to slides. Trying to get done here before we slip out into the next 100 minutes. Okay, so that took us to sampling. Now, the sampling appendix. I'm going to skip a little bit of this sampling because we've embedded some additional things here that are in the Word or PDF document to this that are supplemental to the HUD audit guide, and we're not going to have time to go through all of that today. But I always leave it in here. We know we're going to be doing attribute sampling. So the types of sampling that are given here, we're going to pick attribute sampling. So that's what HUD's going to do. We don't care about how you pick the sample. Statistical, non-statistical, you can stratify it. I can show you certain circumstances where it makes very good sense to approach the audit when we get down to cash disbursements in multiple ways. There is no specific requirement. For the peer review checklist, what it's going to ask about this, okay? And I probably, I think the best way to do this is for me to actually list that peer review checklist. Well, I just opened that up. That was dumb. Sorry. The best way to talk about sampling is to really go over Appendix A itself and to also then tell you what the peer review is going to look at. And I'm going to open up the most recent one I have. I don't think I have a 2020. If you look at the 22080 PRP checklist, and look at the contents, okay? They're going to ask you some things about the report. This is from Chapter 1. And then you're going to get down here. Is the wording right? Did they have the schedule of findings? The status of prior audit findings? Let's get down to the actual Chapter 3 of the procedures. Working paper areas. Chapter 3. Did they give the opinion on the right areas? if the testing was performed on a group project basis, did the sample cover this? Was attribute sampling used, and were the minimum sample size areas or sample size guides met? That is what they really want to know. Did you use group project based sampling? Did you follow the requirements for that? And number two, did you follow the minimum sample size requirements? In fact, look at chapter 3. Did you test the areas in accordance with the requirements of the guide or justified alternative procedures? And then simply, did you follow group project-based testing, and were your sample sizes sufficient? That is all they're asking about here. Okay? So from a sampling guidance perspective, what you need to know is, are we going to use group project-based sampling? Are we going to use it in the right area? Did we follow the requirements? And did we follow the minimum sample size requirements, which are listed here again? This is just from Appendix A of the audit guide. It's in Chapter 1 now. It's also in Chapter 3. It's in both places. Now, the rest of the sampling, if you report on group sampling, findings in the sample must be reported on all projects. The dollars involved should only be reported on the project that had the issue. And management letter comments follow the same thing. And refer back to Appendix A, which is really here on slide 21. Documentation requirements. Yeah, there's a little more extensive, but you can see what the peer review question was really asking. Did you use the sampling guidance for sample sizes? And if you use group project-based sampling, did you meet the requirements? Yes or no? Okay, now I'm going to skip all the AUC 530, the sampling. For that. I'm going to really come back and address one thing after the break. So I'm at 11:42. Sorry, we've gone over. We will meet again at noon Mountain Daylight Time. That's 18 minutes away. So let's take our break, get a drink, some food, and we'll be back in 18 minutes. Okay, everybody, we're ready to get started. I've got us right up at 12 noon. That will take us through the next 100 minutes to 1:40. So we're all excited to keep going here. There were a couple of questions that have been raised, and I'm looking for an answer to a couple of them right now. I have the answer, but I thought I would just actually try to get a more complete answer listed. Okay, Cheryl, you asked about income tax basis financial statement still accepted by HUD. The answer to that is no. They cannot. In fact, they probably never have been. The ones we used to issue before were regulatory basis financial statements. Now, the guidance I'm going to quote comes from what we call Uniform Financial Reporting Standards. This is the rule written into 24 CFR Part 5 Subpart H, is where Uniform Financial Reporting Standards were embedded in the requirements. And this is for Chapter 3 for multifamily housing. I mean, well, it's not Chapter 3. It's the section on multifamily housing. So, annual basic financial statements prepared in conformity with generally accepted accounting principles. Now, this is for, I think we're in multifamily housing here. Maybe I'm not, but it's going to say the same thing. So, the basic rule, for-profit multifamily, we could go to 43. If I can see the page numbers. Either way, REAC requires GAAP financial statements for every filer in REAC. The information is included, this is on SAS 29. Remember, auditors are required to issue a hard copy report on the financial data templates. This was what they're talking about. And then, of course, the financial statements are GAAP. So when you look at it, if you want to get to a couple of the definitions, GAAP, the basic requirement up at the top is GAAP. So all REAC financial statements are GAAP. There are no income tax basis requirement or allowed by HUD. Even RD at this stage of the game is listing GAAP financial statements as a requirement. You have to really work hard at RD to get them to accept cash basis financial statements. So I hope that answers that question. Emily, the PRP section that is for HUD audits with major programs. Yes, if you had the checklist 22080, this checklist is for people that issue for-profit HUD. Well, it could be non-profit HUD also, I guess to some extent. But that would probably be more single audit. You'd have to use the single audit checklist and then merge into HUD. But this would be more for major programs. If you are not a major program, okay, you are only yellow book. So this would not be a complete listing here for, this would only be the listing for having a major program, HUD loan or Section 8. If you did not have a major program, you would not have a HUD major program report. You would only be a yellow book audit, and the PRP section for that would only be the yellow book side. Okay? And that would be 22, 110 or 120. Okay, so. Awesome. Now back to the slides. I think we'll get past that on the documentation. Um, what I just put in the work paper documentation for the sampling is simply just this. Both peer review and specifically for uniform guidance, but for HUD also, it's probably more stringent on uniform guidance, but HUD could get into there. They're looking for these controls, the testing of the controls. Okay, now as we get to that, let's jump into compliance. Now, the compliance areas listed. Now here I would suggest you keep the PDF handy. So get the slide down onto a one page or half the screen or on one screen and the PDF on another screen. And I'll refer to a couple of those things at the same time. We'll spend the next 100 minutes doing nothing but these compliance areas. And some of them are very easy and some of them are a little more convoluted. But here we go. The ones that are in bold were new in the 2008 guide. So when you look at this, cash receipts and disbursements were not they were new in 2008. Now that's a little bit interesting. When you look at the HUD audit guide, and I'm probably going back to 2001, the previous one. Our chapter 4 was multifamily housing, and there were a couple of comments in here. Now the one I'm really going to look for specifically is related to fair housing. Because we removed the fair housing report. So this statement 1-9, fair housing, when performing compliance work in the fair housing and non-discrimination area, the following guidebook should be used. Okay, then they're going to get down to another conversation. When reporting on the fair housing requirements contained in Chapter 4 or Chapter 3, right? The independent auditor should report on fair housing and non-discrimination. Where the activity is non-major, fair housing should be included in the report on non-major programs. Now, we don't have that anymore. There is no non-major program. Okay? Oh, there was also another question Michelle told me about. The chat window has not been scrolling with this, and there were people asking about Chapter 2. So Chapter 2 can be linked to from our website. You can get to all of them if you go to our website. You can also you just do a search for HUD Audit Guide, and the Chapter 2 came right up, and it'll link to it. People should keep track of those, but I'm looking at the old one, so I just want to make sure everybody knew that, and I think Michelle's now posted another link here right now about where the audit guide sections can be downloaded from. Okay, now you should report on fair housing and non-discrimination where the activity is non-major. You would just include this in your non-major report because we're not giving an opinion on any non-major items. Now, the non-major program report has been done away with. So what we are left with is the yellow book report, and that's fine. But what they wanted to say, where the activity, like a loan, is a major, the auditor should report on specific examples of fair housing. And the point about this is that you could not give an opinion on fair housing. So this example E, was a negative assurance report. and you were being told to not include any opinion on fair housing. So you would have this other report. Now, the reason for bringing this up is that fair housing and non-discrimination is an audit area, and we can't ignore it, but you cannot include it in your opinion. If this is a major program, you never include fair housing in the opinion. Okay, that's just something you have to know. Now, cash receipts and disbursements. Let me go back to that audit guide. And I'll give you a little background into what kind of crazy stuff we have going on here. If I went back and found the 1997 guide, I've got one here somewhere, okay? And so I don't know why I can't put my finger on it right now. But if you went to look at that guide, you would find that there is no, oh, sorry, am I in chapter 4 or 5? Oh, we're in 6, sorry. And I want to give you a little background about why the group basis sampling was included, why it excludes certain things. Okay, so if you get here, residual receipts, distributions to owners, fine, tenant application, the tenant file testing. Look, there's no receipts and disbursements. What happened to that? The 1997 audit guide had receipts and disbursements in it, and people told George Dado, they complained to HUD, hey, you can't do that. Why are you putting stuff in the audit guide that would just be part of our normal audit? We would always do cash receipts and disbursements testing. So when the 2001 audit guide came out, Mr. Dado removed it. Then for the next 4 years, they did reviews, and what did they find missing in all the audit work papers? No cash receipts and disbursements testing. And George says, what the heck didn't you, you told me you were always going to test that. And they looked at it and said, well, it's not in the audit guide. We don't have to do it. So George had a little bit of a negative reaction and stuck it in there and said, now you will always do it, and you will not even do it centrally. And that's just the revenge of the OIG. It's kind of like a Star Wars movie. Revenge of the Sith, something like that, I don't know. So that's why we're stuck with it as it is, because we were all very excited to get rid of it. And apparently we got rid of it so bad we never touched it again, simply because it was not in the audit guide. So now it's in the audit guide and it doesn't look likely to go away. Now, out of these, some of these are not that important. For instance, federal financial reports. This requirement exists in very few circumstances. Now, I have in my tool set here a summary of the audit guide. I can put it down into the materials for you for today's class. The completion of something like this is risk assessment. So we have the insured mortgage types across the top, whether it's non-major. Now we have the audit guide sections going down. Now federal financial reports is this category here. There are multiple types of reports depending on what you believe is the requirement. I personally do not believe that annual financial statement filings are part of that problem, because these are other things. But the other reports, if you're a co-op, there were some reports. They had the 79, 80, and 81. These are the normal reports that we would see people doing in specific circumstances. Then you have a result or excess rental income report. Now, we've highlighted these based on what the audit guide says to look at. The rest of these we've now taken down and split among the different programs to say no or yes or whatever, what applies to which, okay? This is part of the risk assessment, being able to understand which program requires which thing for you. So I'm going to put this down into there. Sorry, CPE, private courses, HUD 101, Part 2, compliance matrix. This is our attempt to split up into the programs which compliance requirements generally apply to that program. So you don't have to do that. Okay, federal financial reports generally does not apply to many things. Okay, Brandon, something I've been debating in my head. Does materiality come into play with certain accounts when we are testing or not testing related to noncompliance? Okay, Brandon, let's just think a little bit about what this means for materiality. Now, if you're looking at PPC in particular, and we're talking about a tool set, and I don't think PPC is any more or less unique. What we know is that out of AUC 935, we are told to calculate a compliance materiality. Okay? And when we look at that, sorry, I was just looking through PPC itself here, trying to get the answer. Planning judgments. Oh, I hate their form stuff, sorry. Let me just get to the actual checklist. And I think this is a dilemma for us in general. I'm not going to lie. For-profit materiality. Oh my gosh. Nonprofit materiality, for-profit materiality. It doesn't really matter. Let me just get the nonprofit one. I can't see the other one here. Oh, there we go. Materiality. So we're going to calculate financial statement materiality, and nobody's got a better tool one way or another. I don't care whether you're CCH, PPC, whatever. You're going to have that materiality. And then, of course, it's going to get down here to this, and they're not going to let me calculate my compliance materiality in there, are they? They want me to separate them out. I don't ever separate them out myself, but let's just assume that we're going to do that. So let's get the planning one out here. I wish they would just call it something else, but anyway. So they're going to have you look at this and say, come on. Okay. Let's think about this for a minute and just look at major programs. So for Section 8, the name of the program, and the percentage is typically always seen to be 5% of total assistance. I don't know why that is the number. I don't love the number. I don't, how that number comes about. There is a long series of discussions about 5%. But for me to complain about it or do other things, so it just is kind of irrelevant. But nevertheless, Let's assume it's 5%. So you're going to tell me at this stage of the game that I have $800,000 of subsidy. So it's a major program. Okay, so I'm going to just, 800 times 0.05. I'm going to have, a $40,000 materiality limit. Okay. If I do that, that means I can be off by $40,000. I guarantee you, for you to be off $40,000 on subsidy calculations, you would have to have so much incorrect stuff going on. It would have to be material before that. Now let's go to the mortgage. Okay, and you're going to, oh, why did we just do that? And let's say I have a $10 million mortgage. Now, if you tell me that you have a $10 million mortgage times 0.05, you're going to have a $500,000 materiality. There is no way in the name of under heaven, earth, hell, I don't care where you want to go, Sheol. There is no way that number works for HUD in the very least. HUD's materiality is it is $10,000. So you can go ahead and tell me you calculate materiality at 5%. And this is the big mystery. So I'm not going to lie. I don't really like this. But when you look at what tolerable misstatement would be, or whatever you're trying to get to for that program, it's going to be less than your materiality. There's no way HUD will allow anything like that to slip by. So individually significant things, they're good for us to talk about and to establish some materiality, but your materiality is much lower. If you're really looking at this, and I have, let's see, what did I want to do here? If I'm looking at my templates, and this is a tough one to deal with because, the number is always 5%. And I don't want to get caught up in materiality very long, but because this might be much more of less of a HUD 101. When you look at this, performance materiality and having it discussed, but when I look at compliance materiality, there was a Section 8 program, okay? 5%, $28,000. And I said individually significant things will be $10,000. Now, if I had a major program mortgage, 221D4, okay? And it's $10,000 or $10 million. And I don't know why this isn't filled out, so sorry. That's $500,000. I can guarantee you cannot justify a $500,000 item not being recorded, because if you had a $5,000 error, it's going to raise, $10,000 every alarm bell on the planet's going off. So anyway, yeah, I think that is a problem for planning materiality because HUD's looking at around $10,000. This 5% is a good backstop for us to say, well, if I didn't detect non-compliance, because at $30,000, there's a reason for that because my materiality is $500,000. But most auditors are going to detect non-compliance at much, much, much lower numbers than their materiality. They know what's going to happen. There's just, these numbers are way too material for HUD to get interested in. So that's a hard thing to deal with. Okay, as Susan, the PPC forms aren't going to come out for a while. I would think that you can use your 2019 engagement letter. The difference I would look at there is independence. Okay. So for simplicity, if you have a cash account that is over $50 in it, I don't need to perform compliance testing over it. Brandon, let me say this. Let me answer the first question for Susan here. Yeah, I would say the only adjustment for PPC forms right now would be related to independence. I do not know anything else that would affect your engagement letter, but you got to look at non-audit services, the redefinition of things that are automatically impairments and management having to approve them. Whether you adjust the letter for that or not is unknown at the moment. Mine already had it in it, so I didn't really need to adjust much for that. But as a general rule, the reports aren't changing. We don't see a lot of other things changing for that. So that's okay. So Brandon, if you had $50 in a cash account, it's not what's in the cash account because there's no real compliance over cash. Well, there is, but the problem would be receipts and disbursements over that. So when I look at the cash balance, do I have any compliance procedures to apply to it anyway? The answer is not really, but I have receipts and disbursements that would still go on regardless of the cash balance. So I think the answer is yes, but it doesn't really work that way in most cases. Okay, so that materiality is taken into place. Now, federal financial reports. Most of you will not have these. Most of these reports, the specific one, if I'm going to highlight one of those, it would be the monthly accounting reports. The monthly accounting reports are the ones we typically see, and then only if the project is having financial problems. Okay? So that's 79, 80, and 81. Those are the reports we generally see that are non-program specific. So if the program is having problems or running into challenges, the HUD, the field office will just simply tell them, hey, for the next year, you have to file these monthly accounting reports. And then we would have to go look at those reports to see that they were collecting the correct data. It's actually asking them to sample. So if you had 36 of those 12 months worth, you would have 36. That would be 4 reports you would pick and look to see, did they come from the right information? So for the most part, those amounts are going to be not direct and material, or even not applicable. So when I look at these, I'm saying, look, it doesn't really apply to me. It's in a very unique circumstance that those reports apply. Typically, a project that's showing a little more financial stress. I hate to say the word trouble, but in HUD's world, maybe I'm losing money. Maybe I don't have good occupancy, and their main trigger to pull on that is just to say, give me these reports, because they don't know what else to do for that project. It's in their checklist to have people report monthly on the financial status. So you would go through and follow the requirements in the HUD Audit Guide's procedure list. Now, that wouldn't happen very often, right? Fair housing. Fair housing is an item that we have to address, but it will not be an opinion for us. So this one is another problem. Now, fair housing, what is the minimum we need to do? Well, the first thing is we generally have collected the fair housing marketing plan. Now, a fair housing marketing plan is a document. Oh, that was not the right one. That was only one of those. Close current tab. I opened the wrong one. Looks like I'm having PDF problems now. My PDFs have been having problems the last couple of days. That's the full chapter 3. Don't need that. I'm going to have to figure out what's wrong with my computer. Sorry, I'm going to have to reopen them, I guess. Let me close all this. Okay, back to the materials. Do all insured mortgages have fair housing marketing plans? My clients, some of their agreements. I'm not aware, Susan, of any HUD insured mortgage that does not require a fair housing marketing plan. If you think about it, the regulatory agreement, and the only way to know that is to go back to, let's put it this way, there aren't many, I'll say that. And again, I'm not trying to obviously get too excited about the fair housing marketing plan. It's something we have to deal with in a couple of areas, but we want to do as little as possible in fair house area without getting too into it. Okay, so let me get down here a little bit about the plan, and then I'll go back and get something else open. Okay, generally this fair housing requirement applies and you get a copy of the plan. Now, there can be certain circumstances that I am not remembering here because I don't keep track of every program's specific requirement. Let me see about the regulatory agreement. Why can't I find that? But anyway, hang on. I close Windows, open Windows, have problems with Windows. HUD 101, Part 1. If you it could be possible, although I have not, I do not recall. Okay, other than a tenant selection plan and occupancy, borrower shall not select, other than a 231, which is elderly, you shall not have a problem with discrimination against any person by reason of the fact that there are children in the family unless they're courts of fair housing. The next line I was looking for, see, I'm having all kinds of problems here with PDF. Fair housing again. If you went back to who's required, I'd have to go back to the basic statements. There are some rules that I can't remember because this doesn't actually say in here about the regulatory agreement whether the fair housing plan is required or not. You cannot discriminate, we know that. And so I have to answer that specifically to a program. Okay, I don't have a list of a matrix of which ones apply and don't apply. I just haven't been tracking that as much. So it could theoretically be true that a program does not have a fair housing marketing plan. Now, if you have subsidy, you know you have a fair housing marketing plan. No doubt, no doubt whatsoever. If you were at 202-811, you have a fair housing marketing plan. Any other of those, there are some other certain types of programs that all have fair housing marketing plans. So the only one that I know that may not have a fair housing marketing plan would be a 221D4 or a 223F refinance vehicle. Okay, or a 232 may also not have a fair housing marketing plan. But if you had it, I've listed what is in the plan and how you update it. Now, all this really means is how do you advertise to individuals? And so we don't want to get too caught up in that overall discussion. If you, oh my gosh, did I not open that back up? And so what it's really asking about is how you advertise. So this is what the insertion here is how do you do this? And one of my clients in West Virginia, it's a small little place. I just do it for, heck, I've got to do their financial statements later today. Anyway, she's 24 units. It was a mark-to-market project, and so someone at HUD or the contractor is asking her why her advertising expense is so high. Do you know why that is? Well, I said, yeah. She told me why. Because I have to advertise. In my county, Calhoun County, West Virginia, does not have enough of an Asian or African American or Hispanic population. So we have to advertise for African American, Asian, or Hispanic people specifically in the 3 adjacent counties to say we are advertising to minorities in there. And that's all this really is. So we don't want to get too caught up in it. If we get it at all we do is look at it and say we have it. Okay? Now the bigger comment out of fair housing for Section 8 only is the tenant selection plan. This one is a key internal control document. And it's a big policy statement on how we process tenants. So obtaining this and evaluating the tenant selection plan is very important to us. So we get a copy of this is the requirement of the guide. And then we have some other procedures. We review that, and I have inserted what the requirements are to include and what the optional things to include are. That's what's in italics. And the rest of that should come out. What would I do? If I'm Section 8 only, or I'm Section 8 at all, I'm going to get what would be the limited procedures? If I have a fair housing marketing plan, I'll get it. If I'm Section 8, I'll get the tenant selection plan. Then I'm going to inquire about all the other documentation, communication-wise, that shows we have something going on. I have to make this inquiry anyway. Now, chronology files would be all the correspondence listed by day we got it. Nobody does that really anymore, okay? And then what I would do is I would look at cash disbursements to see if there was a payment at all for potential litigation or discrimination. We're paying people off. And then during tenant files, I would look for any other discriminatory things if I have a tenant file test. Other than that, that is it. We don't want to get too caught up in anything else. So, yes, it's possible some may not have a fair housing marketing plan. I cannot tell you at the moment who that is. Why I don't remember that is a little bit of a mystery to me right now. I'm probably just getting older. About that. So, let's go on to the next one. Get out of fair housing, which is something we don't really care about. So, but the first two, federal reports and fair housing, we're getting out of those pretty quickly. Now we're going to mortgage. Now, the mortgage status. This is an easy series of things. If you have a HUD-insured loan, you get a couple of ideas coming out of here. Now, the audit guide is asking for a couple of decisions. And it's just saying, hey, make sure you pay your mortgage on time. And we get a couple of choices to do this. We can vouch payments or we can do something else. Now, that something else may look something just like this. If you can get this out of the client, okay, This would be, this is Bricadia for a client I just did here recently. I summarized it down, or I can get it out of a format. Maybe the year-end statement shows me a summary like this. Some lenders show a summary at year-end like this, and some you have to take the monthly. I just like to do risk assessment. I take those mortgage statements. I can get online. I can do a couple of different things, and I've put in the payment process of this. Now I do that because I'm looking for the reserve for replacements down below. I'm looking to see when I pay my escrows. Okay. Now, the risk on a mortgage is not that significant per se. And I've shown this before, but you can go straight to HUD and get your mortgage balance. HUD, insured mortgage database. HUD makes every lender report to them every month the status of every mortgage. And they do this by month. So this is probably going to be September's month. I won't know till I see it. Is it downloading? Okay, it downloaded. This is as of, looks like 10/5/2020. Now, it will tell you the original mortgage amount. Sorry, I'm just going to squish some of these together. So mortgage is really one of these things that is the least risky thing on the HUD audit. I mean, most mortgages are paid automatically. They just say, take the money out of my account. RD, they take their mortgage, you know, as far, Angela, look, the links change from time to time. So let's just keep it this way. If you'll just type into Google, HUD insured mortgage database, then Google will always take you to the right place so far. The links, HUD changes links all the time. So we just look, you know, it did change, what, about 6-8 months ago? I don't know. So I just look it up each time now. You can actually get your original mortgage payment amount and the current mortgage principal and interest balance, you know, so current principal and interest and the insured mortgage balance to date. Now, there's a trick to this about why you want to do this. So you want to come down and you want to click on this link and you want to copy link location. Then you come up and paste that in here. Now what it's going to do is going to give you a date. Now they've changed this now so that I used to could enter into here a prior date. So I could go to 09. Now Brandon, can you use this as a primary source or is this reported by the project? No, Brandon, the project does not report. The mortgage servicer reports. In my opinion, you can, and let me tell you why, okay? Let's go back to risk. So I would enter, by the way, before I skip here and get too many things changing my mind. Oh gosh. Okay, I could change the date here and go to 09, and I don't know if 05 will do it because I don't know what that number is going to be. Will it give me the balance? And now it's going to tell me a page not found. I will have to experiment till I find the right date. So I might go to 4, but I can work backwards and find September's mortgage balance. if I can get the dates right. They've changed it again, so it's harder and harder to get back and find prior months. But this balance, I would say you come out in November or October, and you pull that balance down, and you can just search all your clients out of that balance at one time. Now, why do I care about this? Because number one, I want to do this at interim anyway. Now let's go back to what I'm doing in planning. If I have a schedule already laid out, or I have a mortgage statement, I can go back, and I don't remember what this client name was, or I would look it up. But I have all this data already, and I'm only asking whether this data is reliable or not. So if I can go back and look and say principal is 8363 at the date I'm looking at it, and I can prove that balance on HUD, well then what else do I need to do? I can do all this at planning. This is risk assessment stuff. Okay? I summarize the reserves. I look at the payments so I can find out what my prepaid amounts are. So on these dates, I know I made the payments coming out. And I summarize that here. And I can recalculate almost everything around this at one point in time. Now, most people will still turn around and go confirm the mortgage because HUD does allow them to do that. So I'm going to go all the way down to my thing on the mortgage. So you get a copy of the mortgage note, the amortization, risk assessment, right? That's a risk assessment procedure. And understand how they get it paid. That would be risk assessment and internal control. And then determine whether the mortgage was paid by either obtaining or preparing a schedule or by confirming the balance. Now, once you've done this for HUD's purposes, what is left to do for GAAP? And that would be my further audit procedure, because now I'm going to go ahead and look at interest reasonableness. I'm going to calculate the current portion of the debt. I'm just going to look at the amortization schedule and take the next 12 months. If I need to get to year end, and I did this at interim, I can come back and then just look to see that we made the last 12 payments. I can go to my general ledger immediately and get a conversation of, sorry, I don't know what this one was doing. Oh, that was nothing there. But I can do all those things with regard to the mortgage, and it's over. I mean, this is the simplest thing of all. So you can get it from HUD, you get a schedule. None of that had to be done. And so the risk is very, very low on the mortgage balance. The only challenge I have with the mortgage is coming up with a control. How do they make sure they pay their mortgage on time? And that becomes a little more challenging. Okay, that's the mortgage. Now, the next thing would go to reserve for replacement. Now, reserve for replacement is just a forced savings account. Okay, so Brandon, I'm going to get rid of your question here as answered. People vary on whether it can be used as a primary source. Obviously, from me, it doesn't come from the client. It comes from HUD. I think when used in combination with the other data you've already gathered at risk assessment, I conclude that I have no reason to confirm the mortgage balance. The only reason people do is they're still looking for the extra things from the confirmation, but I have no reason to believe any of those extra things would be in existence, okay, unless I have other indicators of it. So I don't really feel the need to confirm mortgage balances. A lot of people are doing away with that. Most of this would be done at interim, and we just update to see that the last payment or two was applied or made in the ledger. Now, the replacement reserve is a requirement of the regulatory agreement. We're having a forced savings account. It's established in a separate account that's escrowed. Michelle, you may have to ask Brandon about which document. He's asking where is the website to get the document. If he's talking about, I don't know which document, Brandon, you'll have to just bump it up here. Okay, he already got it. So we got some requirements. It comes out in the mortgage payment. It's put into a separate escrowed account. The client cannot get access to this money without HUD approving it. So there are rules around this. The amount is set in the regulatory agreement and is updated each time there is generally a rent change. When the rent increases, HUD many times will increase the reserve for replacement requirement. Now, when you look at this, we're talking about some forms. And the list in the Word documents, you'll see the form coming up in there. It'll be a 9250. Now the 9250 looks like this. If you're actually withdrawing money from the reserve for replacement, you mark it there. And man, I am having a problem here with PDF dying. Must have a memory leak or something. I don't know. Anyway. Cannot scroll. This is what the form would look like if they have a new amount coming out of here. The HUD will give you, the mortgage lender, a new balance to put in. It comes in on the 9250 also. Man, I am as weak as can be on PDF at the moment. So that would be the form, and you have to get this approved, and it's something we look for to say, did you take the money out with the form? And the form increases the money we put in. It goes, HUD sends it to the lender, and they begin withholding more money in the mortgage payment. Now, one of the reasons I do this analysis right here is that if HUD does this, Stacy, there is no real method that you can, I don't think there is a method to look up a 202 capital advance. So here's the thing, they never change, right? They don't amortize. So if you have your regulatory agreement, that amount would never change over time. So I feel no need, only about half of the capital advances, are shown as debt. All new ones will be shown as debt because you cannot recognize the revenue on them now under the 202, the section 2018-08 rules. So I don't know anywhere to look up the debt on a capital advance because there's no reporting of it that ever goes on. It's just simply there. So whatever that amount is, it stays there for a full 40 years. It doesn't have interest. It doesn't impute interest. It never goes down. It's just the regulatory amount that sits there for the full 40 years. So I don't know any way to do that, okay? Now, on the reserve for replacement, I like to schedule this out because once I know what the 9250 should say, the downside with the 9250 is this. HUD increases the amount. They send the 9250 over to the mortgage company. By the time the mortgage company processes the change and actually collects the money from us, it's 2 months after the date of effective date. So the auditor comes in, asks for the 9250, which I still cannot get. Dang it. I'm trying to kill this and start again, but man, it is not a killable thing, is it? Close window. Close the whole darn thing. Ah. So the auditor comes in and says, hey, I got a 9250 that says on June 1st or July 1st, we were supposed to increase the amount by $150 to the reserve for replacement. But the first payment is in September. So the auditor's going, hey, wait a minute. I'm missing $300 of reserve for replacement. Oops. That's a problem. And because of the schedule in the reserve or the required reserve analysis, you would be reporting a finding essentially, because it's going to be automatic. It's going to be $300 off. Now, it's not really material enough to be a finding, but HUD's going to require that to be listed. Yeah, I've tried that, Yvette. So I tried to close them all. If I had a second, I would just go into control panel and kill the whole Adobe suite, but it's running into a problem right now. So anyway, I put this schedule together and do that based on so I can indicate whether I have a missing 2 months worth of payments. This is all just about avoiding problems with this, because the BREAC financial statements are going to require something else to happen there in the schedule. I'm going to try one more time here to close the window, but it's not closing. Everything's hung up. Okay, anyway. Task manager, sorry. Just nothing like a little piece of unhappiness in the middle of your day, right? You want to show things and they will not show. Well, that isn't working either. End task. Okay, well, I'm stuck. So that's why we do this. Other than that, when you get a withdrawal, all you do is look for the 9250. Okay? It's a pretty simple thing. So client, it has to be invested. So we're looking for interest to be recorded. When you go to the financial statements, which I cannot show, there's a schedule for this. And on the bottom of the P&L, we always ask, did they or did they not have... See, it's frozen up all my computer now. Did they or did they not have the minimum requirement? So I would list down the minimum requirement was 12 payments for $27,958. Did they make that or not? Yes or no? And if I'm off our $200 or $300, I'm in trouble. I don't like it. Okay, so that's the reserve for replacement. And you end up with a requirement that says if you're over $250,000, the client is supposed to check the bank ratings. We're verifying all deposits by looking at the confirmation to the mortgage or the schedule we already prepared. And we just simply ask, were the disbursements authorized by HUD? And we can look at those things compared to canceled invoices. We typically don't do a sample. Most people just do 100%. Okay, now residual receipts. This applies primarily to the nonprofits or to limited dividend entities. It is just exactly what it says. If you received too much money and didn't spend it, you cannot do anything with it. It has to be put into a separate account. And for the most part, we're getting very much away from having residual receipts. Only places that have them consistently are reserved for 202-811s and a few limited dividend Section 8 contracts. More and more and more, we're getting rid of them. Okay? which is not a bad thing. So more and more we're getting out of the idea of having residual receipts. HUD is basically always allowing clients to take their full distribution of surplus cash. And even if you get to a 202, we're allowing a 202 capital advance now to be converted to RAD, and we can convert it to a Section 8 contract, which will allow full distributions. So residual receipts is a thing going away. There are, from a HUD 101 perspective, let me just say there are a couple of things. You could end up having to repay residual receipts in certain programs, and other programs, a certain Section 8 program requires residual receipts to be used to offset the HAP payments. Both of those requirements are suspended in 2020 due to COVID. Okay, so the other thing is, if you had to make a deposit, was it made in the next year, yes or no? Hey, it finally closed. I'm so happy now. Okay, equity skimming. Now, go back into the My HUD audit guide. Part 2. Equity skimming. Oh, my help. Die. Restore, don't restore. Sorry. Oh. Man, I am having computer dilemma. Okay, so what we have today now is sorry, I need to get this killed. I don't know what's wrong. I'm going to have to reload the whole Adobe thing after the end of today's class. Okay. Well, it opened everything else, but I didn't want. Sorry, I very much apologize for this. Okay, now. Equity skimming. The whole purpose of this audit is to detect equity skimming. And so to do that, there are no specific procedures. All we have is a list of things that you are to look for. So we have an Appendix B to Chapter 3 on equity skimming. We get a list of things that constitute equity skimming. So cash disbursements testing would be looking for things like that, including repairs and maintenance to identity of interest companies. And then, of course, we have a list of things that could happen on the receipt side. So this is the prime issue with fraud. And it is the prime issue with cash receipts testing. It is the prime issue with any of the other things we're going to do. We're looking for places where the client could take money out of the project. Now, frankly, I do not believe the client is terribly motivated to do this. So, because they do have full access to all their surplus cash. However, it's a big part of the test, and so what we're going to get it is we're going to look at this in terms of fraud discussion. That's equity skimming. And Michael, yes, distributions in excess of available surplus cash are technically considered equity skimming. Absolutely. Equity skimming is decided to be any removal of money out of the program that is not a legitimate, reasonable, reasonable and necessary business expense or an allowed distribution from surplus cash. That's equity skimming. Now, if I had a client that took a little too much money out because they miscalculated somewhere, I would not call the National Single Audit Coordinator on them. If I found real fraud, I would always call that. So when you're in cash disbursements, you're looking for these expenses, including identity of interest. So if identity of interest things are there, they increase the risk. That would go back to our management functions. And then, of course, on cash receipts, I'm looking for problems here. Okay, so Appendix B is the conversation. That's why I've embedded it on slide 38, or 37, 38. And I'm going to probably just stick to this book now for a minute, now that I've got PDF to work. Now, distributions to owners is all about the calculation of surplus cash. Now, the calculation of surplus cash, you have quite a bit of guidance here. Obtain the agreement, understand it, understand what's required. And in HUD 101 Part 1, we did talk about the regulatory agreement differences and how surplus cash is calculated. Just as a little reminder, here is a calculation of surplus cash. And this is in the material HUD 101 Part 1. So this was back on our first day's material. You take the cash. And it includes, by the way, the security deposit cash. So that cash account would include S13100. It includes 1120, 1121, and 1191. Then receivable HUD comes over automatically. If there are items in transit, now what I would do is I would look at the chart of accounts also to explain surplus cash. You deduct from that the interest. Interest on the mortgage is always deducted, even if it's not a HUD mortgage, HUD insured mortgage. Let's say you have a HAP contract that requires a surplus cash calculation and you have a conventional mortgage. Interest is still deducted because it's in arrears. You take out payables within the next 30 days. Prepaid revenue comes over automatically. Deposits, security deposits, liability. So I would assume there's at least that much cash and security deposits above. And then this other. And this other is determined whether you are on which regulatory agreement. And so if they are on a 2011 agreement, you would only take out principal and reserve for replacement. Interest is already there. If you're on the 14 agreement or 18 agreement, you take out the principal, the interest, the reserve for replacement, and all the escrows. And they go here into this thing, and that to that S1300 120 line. That's really other, okay? And then you calculate surplus cash. That is how much you can take out in the next 6 months. And I think we had that conversation pretty straightforward last time. But that is the calculation. Now, there can be multiple variations on this, okay, that go with it. Now, Susan's asked a question. If there are asset management fees but they're very material, should that still be a finding? Equity skimming. Look, if the asset management fees were paid, and asset management fees are defined to always be paid from surplus cash. So what I assume you're saying is they took their distributions out equal to surplus cash and then paid asset management fees. So the total distributions are in excess of surplus cash. That is almost always a finding. And let me tell you why. It's going to show up for HUD. In the financial statements, they will detect that. If you put an entity expense in the financial statements, and this is probably a little more than 101, but if I brought up those financial statements again, here's what HUD will do. They're going to come down into the P&L, and they're going to look at how much, they're going to come to they're going to go to the P&L also, and they're going to say, look, did you have any entity expenses? The 7,000 accounts. Asset management fees are recorded in the 7,000 accounts. Then they're going to come down to distributions, and they're going to add the entity expenses to the actual distributions, and then they're going to compare that back to the surplus cash. If there is a finding, if it's over, if it's a negative amount, then you're over and it's a finding. Now, the principal and interest, so I would say that's a finding. Now, John, for the following month, principal and interest, that doesn't apply to pre-2001. That's right. Only interest applies in the pre-2011 contracts. Only interest comes out of all of those. Now, TPA expenses are charged to the project. Susan, that depends really. That does depend on what is going on there, okay? So that is problematic. It really depends on what the expenses are for. There are some that can be included and some that cannot. Certainly certain refinancing charges HUD does not allow, okay? Now, keeping going, a lot of questions. I appreciate the questions. Oh, I was going to stick to the PDF for now as long as it ran. Okay, so we've gone through distributions. Now I've given you a lot of additional information that HUD looks at here. I won't go through all those. On a HUD 101 I don't, but I leave it in here for people to get a lot of other questions answered. Most of those are things from HUD or presentations from HUD that have answered questions related to surplus cash. Okay, now down to the last couple of things here. Comments on cash controls. Now this was what Brandon had asked earlier in the day. HUD does list this from Handbook 4370.2. And I should have probably listed that. That's what this is coming from. And I guess I could edit this PDF and insert a text thing. Handbook 4370.2. Whoops. Oh. Okay, that's what that's from. So they list this. Now, what are the controls? Well, first of all, everybody has separate bank accounts. There are a minimum of 3 bank accounts in every project. There might be 4 if you have residual receipts. That is a control. And each project has their own bank account. Then what happens in the regular account? They have a list of criteria. It has to be insured. If you get over the 250, there's some procedures the management agent must do. Other cash management controls, receipt controls. Now, Brandon, all of those would have to be required for cash testing. Now, generally, that would apply to almost all multifamily projects, HUD or RD. But HUD is very specific in the audit guide about that. Okay? So, the internal control testing over cash is absolutely a requirement. In fact, the only difference it says it's when it's for HUD or required all multifamily testing. The difference is for HUD, RD, or single audit, we are required to test internal control over compliance. Therefore, you cannot get out of cash without testing controls over compliance. Now, almost everybody, Susan, has a centralized disbursement account. And that might look like this. So you have a centralized account for cash, but people are running a centralized cash disbursements test. This is one of those. And I have split it out into, I did it through a pivot table as to which projects were covered under which disbursement. So there's the check numbers. That is fine. We are then allocating or requesting reimbursement from that. But the income, cash receipts, always goes into the project account. So we are not considering that a centralized disbursement account violates the rules. Okay? Now, if you have a centralized and the client reports a balance for which they have been, for what they have paid and which has not yet been dispersed, is that okay? Well, it should still be a payable. So that would come back to the reconciliation of what they have asked for reimbursement or have been reimbursed for from the management company. That would just be kind of one of those small bookkeeping things you'd have to take care of to reconcile, because almost everybody's disbursements, if they're recorded in payables, they should be in our payables. But if it's been paid, then it was processed through a centralized disbursement account and should have relieved the project's payables. So it would all depend on how they're doing it. But I have no problem with centralized disbursements. Nobody does it HUD. Okay. Now, those controls go into place, and you are required then to do a cash receipts test. I prefer to never do that sample. I prefer to have a different cash test. I will probably do analytical review over this, okay? And I can do that by looking at a couple of different things. Wow, why am I having so many problems today? If I can do a test, analytical review, that I can find the rent based on the units, okay? I know my gross potential rent. When I came down and I looked at what I recorded in revenue, I'm off by, what, $1,600. It's essentially my vacancy. And I look at my cash collected. I had to break out. The only thing I haven't done here is I haven't broken out the mortgage payment, because when I look at my cash from subsidy, they're already deducting the mortgage payment from it, okay? So I would have to come back up and look at those cash numbers, because I got $58,000, and part of that would have come, that's actual cash transfers, but I've actually paid my mortgage payment. I can actually account for the idea that all the cash made it back to the project. If you can do something like that, that's awesome. But if not, then you have to go do the sampling procedures. Now there's what they're asking for you to do. I don't like this test because what are you doing? You're taking a sample of deposits from the cash receipts ledger, and you're looking at, this would be daily deposits. So I would go in and say, okay, what was made on the deposit? And if on this one I would come down to my account, cash account, and I have each of these, oh, sorry, my GL. This would be sorry, these guys have two accounts. So here I would have the deposits. So this would be a day. That's the deposits for 10/1. That's the amount of deposit that came in on 1/10. So I had a transfer of the subsidy. Subsidy came in, and I had a late fee, a tenant rent, some other things. I would put all of those into the sample. So when I'm looking at that, that would be deposit for 1/10. And then I would look for everything that was not related to tenant rent, which there were none. And then I would take a sample of all the tenant ones I put together. So let's say I had a sample, and I hate this, by the way. I really don't like this. But I have all these days, and I don't know how many unique days I have. But let's, I don't really want to take time for that. But I would, and then everyone that was on that day, like 6/5, if that was my sample day, they would all go into my list for the next one, and then I would pick a sample of all of those individuals for those days. So it's a sample of a sample. And that's what the HUD audit guide is asking for. And what it doesn't do is it never tells us what items we didn't account for. Because I'm taking items from the cash receipts ledger. I'm not starting from what I should have had. So the completeness assertion is never met. That's why most people will try to go to another test, okay, for that. However, something on cash receipts must be done on everything. Now, Michael, you asked, can you further define timely manner, step D1? Okay, they don't really know that. What HUD says is we want you to make sure you go to the deposit every day. And let me tell you the reason for that. The HUD audit guide is still thinking at this time about most people depositing, actually having cash. And so they would put checks or something or cash in a safe, and that made it higher risk. And so some people don't run to the bank every day. But I'm thinking that if you got it in there once a week, nobody has a problem. So I would look at 5 business days as that conversation. If not, I'm probably giving them a little comment. Okay? Use some judgment there. A lot depends on how much money it is, what they're doing, how much control they have over this. Of course, the best is to not have any at all. It just goes automatically there. So many people have technology solutions where it just goes automatically. They check scanners, all these other things that can happen. Okay, so then we just have a couple of other things on understating or overstating revenue. The amounts are obscenely large, 15% on vacancy loss, 10% on bad debts, okay? Crazy amounts of way too material. Then you get some disbursement controls, and you end up with what I consider the one test that can't be gotten rid of no matter what. That's cash disbursements. This is a pretty straight up test. You're just looking for things that could be equity skimming. Yes, you're looking for the accounts, the amounts, they're properly classified, But this test is really just about making sure these expenses are accounted for correctly. There's nothing else really interesting about it. No other projects. It wasn't equity skimming, no litigation or discrimination. It's the one test that we just can't get rid of. Okay? So, and that all goes with internal control, Brandon. So those cash receipts and disbursement tests bring with them all the cash controls. I don't see them ever going away in a HUD environment, whether they are RD or uniform guidance, no matter what. Those controls are always there. Now, I'm going to skip real quickly down to tenant or management functions. And just address those things here really fast. Obviously, tenant files has a huge block of data in them. Holy mackerel. So management functions. Most of management functions is a risk assessment thing. So you're asking to look at forms. Lindsay, here's the thing. You can trace back to the lease. However, now that's a test that may be done even on a non-subsidized project. Are we charging the lease amount? But here's the thing about the lease. Most lease amounts are listing an amount in there, but if you're subsidized, those amounts change every year. And so the lease may be updated, it may not. And what most people are saying is, look, we look at what the lease amount should be saying by the gross potential rent calculation. And all you would do is probably run a sample of those back to say, are these leases, are the amounts in the lease agreeing? And what you're really asking for is, when they went through the recertification, did they update the lease for the new amounts? Did they have a recertification? So that could be a step in there. I don't live and die by it, but you can do it because, number one, if it's subsidized, you have a lot less risk involved in that lease because they're really updating that all the time. But you can do that. It's not a bad step, especially on non-subsidized projects. Certainly that's the case. So you get a 9839 and a 9832. Now these forms are a little bit of a misnomer. The 9839 in specific is an important one because number one, it tells us what our fees can be. And you better have fees on both residential and miscellaneous. You may not have any commercial space, okay? That fee amount is what the management agent is able to charge. We're also told about our insurance coverages over here under question 5. And on question 12, we get told if there are identities of interest, how much related party work we have. Then we're told whether or not we have a yield cap. And this might say something like $38.99. So what that means is if this is checked, they're going to cap your fee yield at $38.99, which says you take the percentage amount you have above, multiply it out, and you cannot earn more than what would be earned by taking the total number of units times the yield cap. Now what happens this is generally about a rental increase, and people are saying, I'm not giving you a rental increase to increase your management fees. So they'll put a yield cap on them. It only applies if it's checked. The calculation down here is always done. So whether or not this is actually applicable, it's always here. But that should be the amount of the yield cap here. But only matters if this is checked yes. That limits how much management fee can be received. Okay? So you get a copy of the profile. It's for identities of interest. Risk assessment procedures all along. Now I've embedded quite a bit of other information about types of agents and how the fees are calculated. Maintenance contracts has to do with IOIs. We recalculate the management fee. If we're paying to identity of interest companies, and some have them, are we at reasonable rates? And there's a whole section on what can be calculated there. And how we earn fees, what calculates for residential income and what does not. And then even what we can charge for other things, frontline or otherwise. Now the last part of this is just down to insurance. Fidelity bonds, hazard insurance, liability coverage, responses, work orders, which is kind of an interesting thing. Some determination about good repair, that's coming out of the physical assessment subsystem. And that's really what's in management functions. Now, back to tenant files. Subsidy is an interesting conversation. Sorry. You use a HAP contract. We went over the HAP contract before, and the HAP contract sets contract limits for what you can earn. Now, the subsidy is done, it is what we would call, I guess in the new GAAP world, it's an exchange transaction because the government's providing a payment. Sorry, I'm going to get out of here. I'm going to stay here on this, on the Section 8. Now, Section 8 rents are determined by HUD every year. So when you look at what they're doing with regard to this, hang on, I've got a thing to share here real quick. Ooh, we're down to our last 10 minutes, I guess. Sorry, I just had to get to one of these here and open this up. Okay, what everybody should have at any one time is a rent schedule for each year. And it's going to set the rent for you. It'll come out in a form just like this. So how many units of one bedroom, two bedroom, what's the rent per unit? What does that mean? And what's your gross potential rent for the year? We now know the upper limit of what we can earn. Now the contract rent is how much you can charge for a unit. Now we're going to go calculate how much the tenant gets paid of that contract rent, and how much they will receive in subsidy and how much tenant payment they must pay. But the first thing is every year HUD resets the gross potential rent. Now, when we do this, we're going to look at the control already in place above about the tenant selection plan. How do we pick tenants? And then we're going to take a selection of tenants that came off the wait list. Now, there are easy ways to determine these things. For me, I like to use the Trax reports. I had one open here, but it didn't reopen, did it? Oh, there's the voucher list. Now, This is a summary of how much we were paid each month by HUD. So in that month, it was 17, the next month, 16, whatever it was. As you can see, we went down the list, and some months were heavier subsidy than others. As we came more into the current period, subsidy seemed to go down. Whyever that is, we don't know, right? I mean, it has to do with the tenants. And so the whole thing about subsidy or tenant file testing is determining how much subsidy was supposed to be paid versus how much was paid. So who came in off the wait list? Now you had to get on the wait list because there is a process to getting admitted. The big risk here on many projects is that people take money. Site managers will take money to move people up on the wait list. So we manage the wait list, and there are a lot of requirements for the wait list. It's a big deal. Now the client's software will have a wait list function in it, and you will get wait list reports out of it. But people come in off the wait list and they can change their position on the wait list based on the idea of preferences. So how we get through here, what we do on the wait list, how we do interviews, what the forms collected are, and then of course we would look at their preferences. So some people have a preference for homelessness. Some people have a preference for senior buildings. Okay, so the wait list is a big deal. And that's a first sample. Who moved in? And so I'm looking for reports that might have indicated who moved in. Now you can get that from the client software, or you can get it from Trax. And I have a one of these. Oh, that's not the right one. Sorry. That's the wrong one still. Man, I wanted to get to the right one, but I cannot find the one I was looking for. Okay, well, let's say I have a Trax report. I can look at this, and this was the other report. I can tell who moved in. So I could come up and set this and pick all the move-ins. I have to go test all, I have to pick a sample of move-ins to see who was coming off the wait list correctly. Did they come off the wait list correctly? Then we're going to pick another sample of tenants. And then we're going to go look at, did they sign the application? Was everyone identified? Things of that nature. So there are a lot of criteria. Oh, sorry, that did not come up. I have an online application. Client has to go get or has to provide an application that asks certain information. Now, I'm not going to get into the details of all the ins and outs of tenant file testing. That is like an 8-hour class on its own. But when you look at their applications, these are the things we can do overall. Do they collect the right information? So they have to identify all the household people living in there. Do they collect the social security numbers? You can collect race and ethnicity data. They have a lot of questions here to help determine what subsidy is going to be, because subsidy can be calculated on what might change in the next 12 months. They have to collect all of this information and then get references and collect information on rental history and income. And they'll have to do this for every household member. So the amount of information they collect at intake is what helps set the software up to calculate the subsidy. Now, what happens in this particular case? Oh yes, Susan, if you have an insured mortgage with no subsidy, you do not have tenant file testing. That is absolutely correct. All you have is cash receipt testing, and the worst thing possible is to look at the lease to see that you charged them the amount that was in the lease. None of this applies unless you are a major program HAP contract. Okay? So if this is a Section 8 contract, then you have this to deal with. And trust me, this is something way beyond the testing of other HUD audit guide things. I'm not going to lie. It's, you know, I can get a couple of things here that are pretty hairy. Now, what I wanted to say here is that you can get tracks reports. And I can't make this a little bigger apparently. This is a summary that tells us here are the tenants from some place. I don't know where they're from, Indiana somewhere. The software, the client's software is doing all of this work for them. So they input this stuff from the application into the client software. The client software does the calculation and comes up with what the tenant payment should be and what the subsidy amount should be. It then talks to HUD every night. It might talk all day long, but mostly I think they're updating at night. HUD gets into track, takes the information, and it recalculates it all. And this is a report that comes out that says that this tenant has income, adjusted income of $84.91. That gets a total tenant payment of $212. And we have calculated, Trax calculates that, and the client software calculated, and they match. And so this is a matching system that says, look, to me it's internal control. Our client software calculated the subsidy of $442. The HUD subsidy calculated at $442 with the same data, and the tenant rent was $212. That seems like a pretty good calculation. So the only issue is, was the data entered correctly into the system to begin with? And that's the summary of what we do in tenant file testing. Now, of course, there's a lot of questions about, did we collect the right data? Did we not collect the right data? And we have an entire class, 8-hour class on tenant file testing. It gets really involved. It's well beyond 101. But this is the idea behind what happens. Okay? Now I'm 3 minutes over. Now that's an introduction. That's 101 conversation. We could get into strategies on some of these. I guess if we had a 201 class, how best to test things. I would probably have a 4-hour testing strategy class to get the most efficient process out. We're still talking about that, by the way. But I don't have any more open questions. I think we've processed the last attendance check. My email is les@ahacpa.org. If you have continuing questions, email me. Otherwise, Michelle, do we have anything else to say here before you, from a production perspective?
Yes, just a few notes here. Thank you for your participation. If you attended in a group, please send a copy of your group attendance tracking sheet as soon as you can to Kathy@ahacpa.org, and CPE certificates will be emailed to you within a week.
Don't be shocked if they come up better. Yvette, we are going to do that. I think we're just looking at the scheduling time to get to the 201. So, and we do have a class scheduled on Section 8. So that's already out there. Much, much, much more detail. Actually having an industry person, a site manager, to help teach that class. That is at least on our announced list. I don't know if we've advertised it, but it's within the next month or so. Okay, thanks a lot, everybody. Have a great week. It's still Tuesday. We're really early in the week, and we appreciate you attending, and I hope you have a good rest of your afternoon or evening.